Welcome back to Market on Close. Let's talk some oil. Crude with a pretty big bounce today. I want to bring in Scott Bauer joining us. A back-to-back session from yesterday. Scott, let's talk oil for a sec because this gap between stocks and crude was getting pretty wide. Now today you've got a big pop in oil. Do you think this is a turnaround? Is it something you want to get long, or does oil still have bigger problems that have been behind its decline?
Yeah, I definitely don't want to get long yet. I think this is just a reaction to the marketplace today about the talks with President Trump and China. And I do think that fundamentally, I still think that there is a ton of supply out there. We're going to see API report later today, EIA tomorrow. We know that the numbers that they're expecting don't mean a lot because they're typically off pretty big. So we'll have to see what they say. But this bump up today, I believe, got some shorts really running for cover because, you know, if we do get some sort of positivity, some sort of resolution, which I personally wouldn't, hang my hat on that, maybe that takes the edge off the global demand, global supply issue.
So I think it's a good point because the tariff situation for me is this point has the potential to maybe have a more direct kind of visible impact, at least in crude, given that the economy situation and the global sort of demand situation might be more easily tied to that. For stocks, we got so much going on with rates and the Fed, and IPOs. It's hard to really dissect really what's happening there. But if we can remove one of the purported major impediments to global growth, which is tariffs, that's got to be positive for crude.
Well, you just said the key word, if. I mean, the market obviously is very bullish, believes in the tweet that came out this morning. I personally don't. The market knows more than I do. However, I look at the charts, I look at the history of how oil has traded off of these one-off pieces of news, and I want to fade this big run up today, just as I wanted to fade it and did fade it last week when we got the bump up on the geopolitical risk of the oil tankers being attacked.
So tell me how you do that, Scott. I mean, when you trade oil, are you going to the futures and trading the commodity? Are you going through a USO ETF? What are you doing?
Just selling some call spreads on the futures. I mean,
Okay.
you can either sell a call spread or buy put spread, but volatility is pretty expensive because we're in an environment here where we're seeing crude swing 2, 3, 4% a day. So premium is pretty expensive. So, I want to play this range. It's something that we look at all the time, and crude typically has a range for a set period of time. Right now, the short-term range is 51 to, let's say, 54.5. I'm selling call spreads when it gets up to that, top end. I'm selling put spreads when it gets down to that bottom end. At some point, I'll need to make an adjustment. But until that happens, that's the way I'm doing this.
Yeah. All right. So, Scott, if you don't believe the crude rally, does that by transition, I'm setting you up here now, do you not believe the stock rally? Do we still think about these two as being joined at the hip, or can one think about the divergence that's emerged as being something that lasts or, we need to respect?
Well, they're joined at the hip for two reasons right now, but there's certainly so many other things out there. They're joined because of the U.S. and China tariff. So, if things go well, they should rally together. If they go poorly, they probably sell off together. And they're also joined because of interest rates right now as well. If the Fed does cut, which everybody is seeing as bullish, which I personally am anti that, I don't believe that it is bullish, but that's why the market is rallying because, the Fed is lower interest rates coming around the corner. Look what the ECB did today. Well, crude should go hand in hand with the market in those regards. But if we take those two pieces out of the equation, and those are two really big pieces, don't get me wrong, I'm not trying to throw them out, I'm not trying to poo-poo them. If we take them out and just look fundamentally here, then I think we have a huge divergence.
All right, Scott Bauer, nice talk. We're gonna leave it there. We got about 15 minutes till the end of the day. Mr. Bauer is the CEO of Prosper Trading Academy, joining us for the CME here in Chicago. We'll be right back. As we mentioned, one of the big movers today to the upside.